Hey, Todd, how are you?
How you doing, Bob?
Great, great. Good to see you. Thanks for joining us.
Yeah, good to be here. Thanks, Bob.
Looks like people are just jumping in, so I'll just get my screen set up here. Got all sorts of people hopping on. So we'll let people get logged in. Okay. Hey, Todd, I just saw that latest update you sent out.
Yeah,
Looked like it was very, very informative.
it was perfect timing that we have
Yeah.
this call right now too, because that just came out like yesterday afternoon for self-employeds on the PPP.
And that is that's pretty specific data I saw. And I can pull that up, or because I have that if you want, and you can kind of go over that if you'd like.
Yeah, that'd be cool if you had that newsletter or whatever.
I do, yeah, and then I can click on any link you want as well.
Mhm.
So look at this. I'm telling you, we've had good turnout this week. But when you start talking about people, how you can get them money,
Yeah,
now
amazing.
people start coming out of the woodwork.
Amazing.
Everybody's here.
It's amazing.
That's perfect. That's a good thing. It's what it's for. It's I can't blame them. I'm in the same boat. Got my PPP loan out application, still waiting to be processed. So
That's right.
It
You down PPP? Yeah, you know me, right?
that is it. Who'd have known that PQ was going to be so critical to our daily lives?
And now they're looking like they're going to fund some more in there. The treasury came out yesterday, talked about that more. Yeah.
They're looking for another 250 billion. So that's good.
Yeah.
That's good to know. Let me see. I'm going to see how many people we totally have. I can't see the whole group as of this moment.
Hey,
I guess I
Todd.
can. Let's see.
Hey, how you doing?
Good. How are you?
Good.
You see, that's Patty reading. Do you see her?
Yeah.
Can you see everybody? If you click gallery view, Todd, you might have a gallery view at the top, and then you can kind of choose different amounts. So a little different than the seminar the seminar one you were on last week. Excuse me, that we couldn't see the participants' faces. So now
there's Patty.
Yeah. So you kind of have to shift around a little bit to see.
You got my taxes at your doorstep.
in our secure quarantine vault.
Yeah,
that's right, Patty.
throw it underneath the door. The underneath the door method of delivering documents.
Right. Basically, we have the same lockbox we've had 20 years. It used to be our mailbox, but it works. It works for this.
There you go. Was it your dad's lockbox back in the day?
Yeah, it's been there for like 28
I think
years.
I can picture that. I think I dropped my own
you probably
monthly stuff off in that drop box.
You absolutely did. Yeah, it was the after hours box,
There you go.
Check it every morning at 8.
There you go. Good deal. All right. Well, we got a pretty good crew here. So I'm not going to go through everybody. Some of you have phones off. Maybe it's purposely. I think is that Jan Carter, just so I know?
Yes, it is. How are you?
Great. Good to see you or hear you. 330 telephone call in 330 or area code. Who's that?
Deb Jennings.
Oh, hey, Deb. How are you?
I'm good.
Good deal. Esther, Reyes Todd, we know you're there. We don't see you. That could be purposeful, or you just haven't found your camera link yet.
It's purposeful.
I love it. You're allowed to have purposeful. That's good. That's a fun part of this whole thing. Anna, we see you. Anna, if I would have known yesterday, I didn't look at my list early enough, but I didn't get to say happy birthday to you, so I had to call you later.
No, it's not me.
Was not you?
No.
Well, there's another Anna that has a Polish last name. How many Annas with Polish last names do I have in my company?
It's many. It's a very popular name.
Holy smokes. All right. Well, then. It was somebody else.
Every few months. Why not?
All right. Perfect. I thought, and I almost promised it started with a Z. How many Anna Z and in ski agents do I have in my company?
Too many.
Not enough, obviously. No, we got to get more. Let's get more. That's
all
good.
All of us are with you.
That's right. Good deal. All right, I'm going through my list here. David Bates, it's good to see you. How are you, man?
Hey, Bob, I'm great. Good to see you.
Good. Awesome. You look great, by the way.
Thanks.
Awesome. Bev Buckaloo, we see you. How are you?
Hi, I'm good.
Good. Patty, we see you. Joe Zucchero with his professional-looking background again. And he's up in.
I'm gonna put the basketball on one tomorrow.
Yeah,
so.
yeah. But give us the basketball arena. This
How
is
do you do that?
Villanova's.
How do you put those backgrounds on? You
It's
click
called
on
the virtual. It's virtual background, and then but if you choose it,
On the
you don't have a
bottom.
green screen. It's under settings. It's pretty easy to do, except mine just doesn't like the whatever.
You have to sign into your own Zoom account, okay? And it doesn't have to pay for it because I have the free account right now. And all you do is pick a background picture, and it's going to say, "Do you have a green screen?" Just tell it yes, and then mine works fine. I know some people they disappear to it, but mine works fine.
Oh.
That's all. It's kind of fun. You can drop any picture back. They have some preloaded pictures, or you can drop it in there.
Yes.
So,
yeah.
We got more people joining. Let's see. You got Danielle. Danielle's on camera today. That's big news.
Right? The
All
kids'
right.
talk is
Good
still
deal.
here, but it's a little quieter.
All right. Good deal. Mary Diaz, we see you just logged in. Good morning. Afternoon, I should say. Barbara Ann is here. Good morning, Barbara Ann. Afternoon, Barbara Ann.
Afternoon.
Todd, Renee Mott's here. Hey, Renee. Oh, look at Jim Shans. Jim Shans is at coming to us live from a concert venue somewhere. Where are you, Jim?
Yeah, I'm at a fish concert up in Wisconsin.
Oh, Wisconsin Fish Concert. That's fish with a PH.
That's right.
Don't forget it. It's like I'm fat with a PH. What's up, bro?
The lawn seats.
Exactly. It's awesome. We've got Alyssa. Alyssa, yeah, you changed your hair even since last time I saw you. You put your hair back in a ponytail or something. Oh, you're muted.
Unmute yourself.
Unmute.
Yes, I put it back. I just had to make lunch. I don't make
lunch. Oh,
over
perfect.
here.
Got it. Understand.
Kids appreciate that.
Yeah, you guys are. Anybody showing up late, you're gonna try. Don't try and blame traffic. That one doesn't work around here. All right.
Bob, even if you did have to drive.
That's right. Renee, yeah, you gotta go. Hey.
Are you feeling kind of like Miss Peggy right now in Romper Room?
Yeah, is that Miss? We were trying to figure out who that was. Was Miss Peggy? Is that her name?
Miss Peggy.
Yeah, that's right. When you look through, I see Todd. I see Jason.
You guys are showing your age.
I know we are showing our age. No, these other millennials say romper. What's romper room? Exactly. Too good. All right, so let's see if I missed you. I see Irma's back. Irma's got the comfiest leather chair for her Zoom sessions I've ever seen. How do I get one of those? That's a good one.
Yeah, that is comfy.
Yeah, it is. You can just tell by looking at it. All right, so Maureen Smith, I see you. Rebecca Frate. For Rebecca and Maureen are going cameraless as well, maybe by design. That's okay.
Definitely by design.
Okay. Perfect. Kathleen McDowell. All right. We got a whole crowd, Todd. So they all wanted, here's their mantra. They all watched Jerry Maguire last night, and they are saying, show me the money.
Money.
All right.
You got it.
All right. So tell me, you want to start going through? Do you want me to bring up your latest flyer thing? Okay. I'll do that real quick.
That's a helpful guide.
Okay. Perfect.
If you want to do that. So about an hour ago, I sent out a recent update. I've been trying to send these updates out. And if anybody has been. Yeah. Hey, Beverly.
I said I saw it.
Oh, good. Awesome. So, if anybody's missing these, you can go to our website, and at the top it says COVID-19 resources, and you can go back through all the past different updates. But, I don't, for the sake of time, I could, the amount of hours that I put in, not during tax season, or not doing taxes, but putting in the stimulus, I could probably talk hours on this. But I'm going to assume the majority of you at this point, especially those that have been getting newsletters, kind of understand the PPP versus EIDL. I'll go back over it a little bit, but I kind of want to dig in a little bit of the newest updates of these things because a lot's evolved since then. So, and there's been a lot of updates. As I've said earlier, basically what happens, and Bob, I have the stage for how long?
An hour. It's all the rest till 2, and then if you can stay longer, then I'm sure and they got questions, then I'm sure they're happy to have you.
Okay, good. So so let's back up real quick then. So the CARES Act came out and basically was the third major bill that came out for the stimulus, and basically stated that they're going to help small businesses, and but they want to do it really quickly. And that was a couple Fridays ago, and since then, usually what takes months for the bureaucrats, IRS, Treasury, SBA to interpret and then get in the hands of banks and other people. Usually takes months. They only had about a week or two to get it done. So all of the frustration in the public about it is, I don't know. I think it's nothing short than a miracle. You know, somebody working with the IRS all these years for, you know, almost 20 years, and them having a bill and then interpreting the tax law and then coming out with it usually takes 5 months. Then we go to class for a week as an accountant, and then tax season hits. So we have that much time for everybody to figure things out. This has just been a week or two. So it's been evolving as people have been reading about it. So the media has been kind of, you know, making assumptions inappropriately, thinking that it's hard data, but it's evolving data. So every time I send these updates, it's what we know now. So if you go back even a week and a half, some of the things in those newsletters are not have evolved and changed. They were accurate at that time, at that minute, but they've evolved. So what I'm doing now is I'm going back, and as of today, as of, you know, 1:09 p.m. Eastern time on Wednesday the 15th, which used to be tax day, but now obviously it's July 15th. So it's usually this time of year, there would be no way I could have a call or do anything at this point until midnight. But now, you know, with the extensions, you're allowed to file your taxes and pay them through July 15th. So they've extended that. So let's go through a couple things, and I'll just kind of go through this in a little bit of detail, and I certainly want to answer questions because I'm sure there's going to be a lot. I know there's been a whole lot of questions with clients. You know, we represent hundreds of small businesses and realtors, and we have a niche with real estate agents and investors too. So we've been getting a lot of these. So I'll try to cater this more to the real estate agent rather than, you know, the business with, you know, 20 or 30 employees. That has a little bit different amount of information than maybe this presentation would. So, and again, it's as of today. So really the main things up at the top here is that there's the link to my website for the updates. And hopefully those of you who've been getting the newsletters are enjoying them. So Bob, if you want to, yeah, we could click there. Bob, if you want to click there real quick.
Okay.
If controlled, yeah, there we go.
Sorry, it's taking a minute to load. There it comes.
No problem. So, you know, the last one was about unemployment when you're self-employed, and I'll talk a little bit about that. The one before that was what to do about the PPP and EIDL. You know, that was when everybody was just starting to get confused about it. That was on April 3rd. You can see in 10 days, there's been a world of knowledge that's been evolving. April 1st deadline, that was with employers that had to pay sick leave to people that were at home for the virus and or virus related reasons. You know, they mandated where you had to pay employees through the CARES Act that way. And then just one more down, we'll just kind of look at a recap of what's happened historically. And, you know, basically the whole, we went through all the small business and individual benefits for the stimulus. So I'll go through some of those too as well, especially on the individual side. And if Bobby, can you click back out to the
sure.
Right.
Newsletter.
Yeah, so that's kind of a brief overview of what we're going to talk about today, and I'll get you guys up to speed with this. So if you want to go back down a little bit in the newsletter there, Bob, and I can kind of give some updates about the PPP. So
perfect.
This just came out last night or yesterday, which is perfect timing for this because many of you real estate agents are 1099 recipients and are file Schedule C in your individual tax return. Before yesterday, there was really little or actually no guidance on, I mean, it was incorrect guidance on how to, it wasn't thorough, how to treat independent contractors for this PPP loan. Just a brief understanding of the PPP loan, some of you that may have just been hearing this for some reason for the first time. You know, basically it's a loan by the SBA that has come out, and it's basically for employers to be able to retain their employees. It's money that they would have to pay their employees based upon a 12-month average from last year times 2.5, where they would get money in their account and then have to pay it out for their employees so they didn't lose employees for an 8-week period through June 30th. If they did that, they get to keep the money. It's no longer a loan, and it's a forgiven loan, and there's no taxable consequence of that forgivable loan in this case. Sometimes loans there are, and as you guys remember back to the Great Recession, when there was cancellation of debts and short sales and things, certain people would get 1099-Cs, and we'd have to work our way out of that tax liability for that canceled debt for them based upon IRS requirements. Well, they're now saying with these PPP loans, it's similar. We can now, due to the economic stimulus, get those taxpayers out of owing tax on that canceled debt. So if you do, again, pay your employees. But the interesting thing, and as long as payroll doesn't drop by more than 25% through that 8-week period leading up to June 30th, it's a forgivable loan, non-taxable. And the really interesting thing about that is then in there originally, when they originally wrote this in early April, they were saying, the SBA was saying that it also includes self-employed people and independent contractors. And, you know, the accounting community was wondering, okay, how does this work? Because ultimately there's no such thing. I mean, most people that are 1099 are not paying employees. How are they going to benefit from this? What are the rules for those types of people? If you had an S corporation, we know now, you know, that it's subject to how much officer salary you took last year, because that's your payroll. But now they're adding another element, which they said they were going to come out on the 10th, and it took them a little longer, which is understandable, till yesterday to come out with guidance on how 1099 recipients can receive the PPP loan, and then how it's going to be forgiven if you get it. So in that link, and we don't need to click on that blue link because it's really the SBA's guidance from the SBA, but I do encourage you to look into that, because there's every question imaginable that you could ask answered in that link. And I only cite SBA guidance. I tried to stay away from the media because I go right to the sources. But the summary of it is basically that if you're a 1099 miscellaneous recipient and filed a Schedule C, you can now go ahead and contact your bank, because these PPP loans are from your bank that your business bank is at, and request to apply for a PPP loan. And you must have a 2019 1040 Schedule C to file. Okay, if you haven't filed your taxes yet, the guidance in that link state that you need to put one together, even if you don't file it, because what they're looking at, and you probably are going to need your copy of your 1099 miscellaneous. As you probably well know, if you're an S corporation, you likely do not get a 1099, because the legal requirement is that businesses don't have to 1099 other businesses that are incorporated or LLCs. So it's only if you're an individual real estate agent that is collecting commissions from FHR or your broker, then you receive a 1099 miscellaneous, and you file on Schedule C in your 1040 that income. Then you come up with all your expenses for everything, the things that are taxable, which your home office, your mileage, potentially your super key fees, your meals, your all the other expenses you can incur, your licenses, etc., licensing fees, and then you're left with net income, which is also known as profit. Well, what they're doing then on the second bullet is to figure out how much you're going to receive as a self-employed person. They're taking the loan is based upon that net income, which is summarized on your 2019 Form 1040 in that Schedule C on line 31. So if you opened up your tax return from 19 and you look at your Schedule C on line 31, of that will be your net income after all those expenses. So you have your 1099 minus your expenses. You're left with profit, that net income on line 31. And it's calculated by dividing that number by 12. So they want a monthly average from last year, and then multiplying it by 2.5 times. Okay. One thing I didn't put on the bullets, which is in there, is that if you made over $100,000 net income on that Schedule C, it caps at that $100,000. So, if you did that, we would probably want to talk about forming an S corporation anyway, which is for a dialogue for a much later, different time. But as far as this is concerned, this is what you would do to calculate that PPP amount. Okay. And then
Todd,
real
quickly on that. So, and this is good that they finally came out with some clarity, right, for the people that are going to be creating these. But earlier you said, hey, look, we've been delayed. You don't have to file your tax return until July 15th. But now they're asking for that tax return that you don't have to file.
Yeah. You're right, Bob. So the thing is, and they said if you haven't filed yet, well, then you can just
Mock up the Schedule C.
mock up one. You might
Okay.
as well file it. You know, I mean, what's the point? Because
Right, that's the majority of, for an agent, majority of their return is going to be that Schedule C.
right.
Yeah.
Yeah, that's the hard part for most agents, right? Unless they, they got 30 rental properties or something. But yeah, that Schedule C is going to be the hard part for most agents, right? So, yeah, that's kind of the dilemma, right? So, time to start, give us a ring or get finishing that out. I personally, right, Bob, why do a mock-up when you can just do the return, and file it, so, or hold it until July, I guess.
Well, plus every agent on this call has heeded my warning and my cry for the last 3 years to make sure that they've set themselves up on a nice QuickBooks, Quicken, some type of sessions that they're coding every check they write throughout the year. So all they really have to do is hit a button and produce a P&L and they're done, right, Todd? Because all these agents have done that.
Well, I gotta tell you, as years ago, Bob, when you were just starting out and everything. I mean, the banks weren't really looking as much for P&Ls and profit and loss statements monthly for self-employed people,
right,
or realtors like they are now. I mean, they're wanting more proof of cash flow and income when doing loans now. They're pickier, I guess, than they used to be 20 plus years ago. So, for that reason as well, and the other reason is from tax planning standpoint, you should know where you stand throughout the year so you can adjust your quarterly estimated tax payments. You're not just guessing. And that way also at the end of the year, you don't have to scramble and freak out and make a big event. It's just you can focus on selling homes and doing what you do as a real estate agent. That's why, Bob, that's great advice. And, as you know, we still have a discounted monthly accounting bookkeeping program for realtors, just for real estate agents, and we still discount FHR agents' tax return fees. So, we have a process and a system to keep you compliant. So you spend 5 minutes a month sending us your bank statements, basically, if even that. And then we handle all the deductions and payroll if you're an S corporation. So, so pick something, whether it's us or you spending time doing it. And then you have to evaluate how much is your time worth staying up doing QuickBooks at night. Do you want to offload that to somebody else as well? But either way, there needs to be some sort of financials. And you're right. I hate to say I told you so as well, but these are all reasons, why, you should treat your business like a business, because that's what it is as a real estate agent.
100%. So sorry to take you off, but yeah, so they're going to go off line 31 of the Schedule C.
That's correct. Right.
Okay.
So there's further guidance in the above link. If for partnerships, don't worry about that. That's stuff to do with guaranteed payments and other things that they finally clarified. One of the things is that I kind of the forgiveness of the loan. How's that going to be calculated? They're calling that owner compensation replacement. That's like the new term now for the first time I've seen it in any of the hundreds of pages I've read from the SBA at this point. It's basically the amount of So when they forgive that, right? So again, they're going to forgive it if you do what you need to do. And I'm sure there's going to be even more clarity coming out on this, because in there, all it really says, it's the amount of 2019 Schedule C net income from line 31 of the Schedule C calculated on an 8-week period. So, they take what the 8-week period of that 2.5 months is, which is about 75%. And that's your owner compensation replacement. And so what that alludes to, since there's no other guidance on that, is basically it's going to be forgiven. I don't know how there's nothing you have to do for that to happen. It just happens automatically. Like you can't unpay yourself or pay. It's not about cash flow or distribution. There's nowhere in there it talks about that. So basically, unless there's further guidance, which might come out later, but they're specifically tying it to, and it's in that body of that link where they're tying it only to your income. They don't care about your rent if you had any, or home office. Like there was some confusion about sole proprietors and home office. Does that count as rent? Well, they just finally said, forget all that. That's just way too much confusion. Let's just focus this on their last year's average monthly payroll, and it'll be disallowed. Basically, that's what
payroll as defined by line 31 of your Schedule C.
That's what they're defining payroll costs. Yes.
Yep. Perfect.
Not actually W-2.
So let's bring it home for just a couple of these agents, right? So let's say an agent who real quickly received a 1099 from me, right? That said $60,000. They do a quick mock-up Schedule C and show $20,000 of expenses between their mileage and all the different things that they take, their MLS fee, dues, all that stuff, and they get to a net line 31 of 40,000 bucks, right? They divide that by 12 and then multiply that number by 2.5, and that's the maximum amount of the loan that they could apply for with their local bank for this PPP.
That is correct.
Perfect. However, now somebody gets a 1099 from me that's $160,000, right? They write off $40,000 of expenses, have a line 31 of 120. The most that they can divide by 12 is 100,000 because that caps.
That's correct.
Correct. Which 100,000 divided by 12 is 83, 33, 33. Multiply that times 2.5, and you're roughly in that 20,000-ish maximum loan amount for the next 8 weeks.
It's good to have a math major on the call.
That's
Bob.
right. Exactly. So, but and those are the two. You know, so there's somebody that netted line 31 was below 100 and line 31 above 100 are the two scenarios you really need to pay attention to for a Schedule C filer. Now, we do have a lot of these S Corps that are online here too, right?
Yeah.
And they did take some salary. Is there any guidance from the SBA at this point that you know of? Is can they take like salary plus K1?
No.
No.
So the guidance is clear at this point, where it's based upon last year's average officer's salary that they had, so divided by 12 times 2.5.
Okay.
Let me kind of add to that, because people sometimes are like, well, I don't know. So if you not to get into this for this meeting, but if you add how much tax savings you've had as an S corporation, taking that reasonable salary over the past X amount of years, you're trumping any PPP money you could have ever had times a large multiple. Does that make sense?
100% agree with you. 100%.
So it's not like you're losing out on anything. In fact, you're the complete opposite of that at this point. It's over what
it's still good advice to if you make enough money to consider being an S corp and saving on the FICA portion.
Yes.
Yeah,
by doing things right and taking the reasonable salary.
Right.
I can speak to any of you about that anytime you want. So offline, off this meeting. So if you're considering that, I can help give you a consultation on that for no charge if you're with FHR. So anyway, but yes, but as far as this PPP is concerned, it is based upon last year's outcome of your self-employed.
Basically, your 940 for filing.
Right.
Which is a compilation of all your 941s.
Right. Which is, if let's just say you were a real estate agent, and you made 100,000 net income, profit, and then you took $40,000 in officer salary, then your net profit would be 60. And your reasonable officer salary as an agent, per salary.com and anywhere else you look at a realtor's salary would be like 40,000. Yeah, you're not going to get the other 60 in the PPP, basically the advisor, which might equate to somewhere like 8 or 9, 10 grand in PPP, but you saved over 11 or 12,000 a year for 10 years in taxes. So it's a break even for this year, but
over the long haul.
Yeah. So there's no like, oh geez, I missed out on something. No, there's also the EIDL you can apply for as well. There's other things too, which we may be able to talk about, but that certainly isn't like you've missed out or you're losing some sort of windfall of money because of this. For everybody else, yeah, I mean, this would be something that is definitely advantageous, or if you had more employees, it makes even more sense.
I'm telling you, this right here, that summary that you've now been able to create that I'm highlighting as we speak is huge, right? Because that gives some real clarity on where we didn't have any clarity up until yesterday.
Yeah, and I took that straight from the link. So believe me, I forget how many pages in that link, but I just try to throw the highlights out there for you so you could easily understand the scope of this and start getting those tax returns together for your banker and give him a ring and her a ring to not a ring, but usually it's online. And down below later on, I'll show a resource that you can use if you're going to, if your bank's not helpful. You know, we've heard a lot
cool.
of.
Oh, good.
Yeah, because I think we are hearing that as well. What do you mind if I open it up to some questions specific to this so far?
No, go ahead.
Okay, Todd. Anybody got any reels?
I do.
Okay.
So Todd, speaking of the drop off of the taxes at your mailbox, so because I'm a corporation and I'm going to base it on 2019 salary that I had, do I need to have my taxes done?
So say that again. I'm sorry, you're a what?
So because my taxes are still with you waiting for this, you know, for 19, do I still, oh yeah, you're saying I need last year's 2019 divided by 12. Never mind.
Well, no, but you only need your employee compensation because you are an S corp.
Right.
Yeah.
Yeah.
Okay.
Yeah. You already have what you need to apply as an S corporation.
Okay.
Because all they're asking for typically, depending on the bank, is either your W-3 form, which Kathy can shoot over to you. Just email her real quick. We've been doing that for 2 weeks. And your 941s and your 940. You know, usually that's all the banks are asking for.
Okay.
They'll know. Just say, hey, send me my payroll stuff I need for my PPP.
Okay.
And Mary or Kathy will just get that to you right away.
Perfect. I know John Lowe, you got a question? Go ahead, John.
Yeah, Todd, I was wondering, has there been any talk or have you heard any discussion about being able to use qualified retirement funds to pay bills during this time?
Yeah, yes, I have. So on the individual employee guides, it depends if what you're using, whether it's an IRA or a 401k. An IRA, 401k, if you have a 401k, you can take a loan out, a bigger loan out now. It used to be 50,000 was the max. Now they've increased it under the CARES Act to 100. You know, and then the account tells you how much, or a plan administrator tells you how long you have to pay that back, and you earn the interest in your account from that. As far as IRAs are concerned, they allowed IRA withdrawals to come out, and basically, let's see, you can take distributions up to 100,000. They're not subject to the 10% excise tax, the penalty in 2020. They can be reported as income over 3 years, or if repaid, without a 10% penalty. So you can spread out that income tax over 3 years. And if you repay them quickly, then there's no tax if you pay them back. You know, there's a certain criteria of paying back that 100,000 within that 1, 2, and 3 year period. Then it won't be a taxable distribution. So they're kind of delaying when you can do that. I always caution people doing that though, because I mean, we've been around, 28 years. So I've seen the recession, the Great Recession, and a few other things. And I can tell you though, my recommendation would be that should be your last resource, is pulling money out of IRAs and 401ks, because, you know, if the market's at a bottom now, you know, let's just say it is, I'm not going to say it is or isn't for the sake of this call, but let's just say stocks are lower than they might be in 10 years from now. I'm not a betting man, but I would say that's probably a fair estimate. By pulling that money out at a low point might not be the best benefit, because it is for retirement funds and it probably has the greater potential of going up from here. And that's even why I'll put the words in the Treasury's mouth. They're saying they're postponing RMD. If any of you are 72 now, they went up on the age 72. You have to take out required minimum distributions out of IRAs and 401ks. They're saying for this year, you don't have to do that, because they want you to keep your money in your IRAs and your 401ks and your other annuity type accounts, because they know that they're basically saying that they don't want you to pull money out now while the markets are low. They want you to hold it in there till next year. So they have confidence in the market. So those are the reasons you would. But if that answers your question as to what you can do with your IRA, you know, that's about it.
Yes, thank you.
You got it, John.
Great question. Anybody else got a question on anything? Let's see. We got David Bates. Let's go to David, and then I'll go to Irma. I'll go after David.
Thank you. I have a checking account that I use just for my business and separate from my wife and I with SunTrust, and they're stalling is the best way I can put it from doing anything, because they're saying I don't have a commercial checking account. And I've had this account since we use stone tablets. So, and any advice or any?
Yeah, so, the banks have been, let's just face it, let me be clear, is that they're getting paid up to 5% from the SBA to facilitate these loans. Meaning the banks are making plenty of money at it. So as a business, whether we like to talk about it or not, they're going to be wanting to look at the larger loans first. How unethical that is in this time. But at the same time, they might be stalling people and doing those sort of things. Down below right here where Bob is right now there's a link that the SBA put together, sba.gov paycheck protection fine. And on that link, you click it. When you click it or go on the website, you can put in your area code, and it'll or your zip, and it'll put in the it'll give you banks in the area. A lot of times the smaller local banks have been a little bit more helpful because they want to earn your business. I've seen that from clients because, there was a scenario where Bank of America, and they still, I don't think they are, taking, even if you've been a bank, been with them for 30 years, they weren't taking PPP loans from businesses unless you had a line of credit or some other credit card with them, which is amazing to me that they would do that. So they were like telling a lot of their clients that they wouldn't take the loans from them. So I've just been trying to tell clients, make some phone calls. I know it's hard because, these bankers are so busy right now with all this. It's just chaos. But some of the, if you Google around a little bit and check this link out, some of the smaller banks might be able to help. Your local banks, I've seen some clients go to those. I don't want to just drop any names for the sake of dropping them right now, but there hasn't been one. But some of these weird banks, like out in San Francisco, like Eastern, Northern, whatever, never heard of, I've had clients that have been finding these sort of banks too. So I don't know, just try to push your banker, because the requirement was you had to have a business bank.
Right.
I do understand you don't have an EIN if you're getting a 1099. You don't have an LLC or an S corporation. So you're, hopefully, for most sole proprietors, I always advise them to have at least a separate account, which you do for the real estate income and expenses. That way, God forbid, if you're audited or something happens, it's separate anyway. But your bank's telling you, hey, look, it's not a business bank as designated with a tax ID number. It's just your social on there. We can't really figure that out yet. Well, let me reiterate the fact that this guidance for you just came out yesterday. So the banks have to still interpret this. We're interpreting it before the bankers are in many cases right now. So maybe within a day or two or a few days, they'll have a system and a guidance from their top legal staff saying, hey, here's how we're going to deal with these sole proprietors.
Well, just the mere fact that they've come out with this line 31 is what we're concerned with, right?
Yeah,
is going to be hugely helpful for the banks as well, right? Because they're like, well, what are we looking at their gross income? Are we looking at their net income? Are we looking at it phase out of their expenses? And so now this appears to at least provide some clarity that they can say, hey, look, whatever you're going to claim as net income, that's what we're going to call your whatever compensation, whatever that form, that quote you had, right? That and use that for your factor to divide by 12, then multiply by 2.5. And let me add, David, I've been looking myself, right? And I've got a bank relationships with a couple different banks, and Todd's, is a little more gracious on them than I am, because I'm calling them on a daily basis, letting them know what I think about their fact that they were happy to take my fees for the last 12 years. And now when I need them, they're like, yeah, we're working on it. Yeah, well, working on it doesn't cut it for me. So,
I've been raising it up the corporate ladder. And what I'm finding is, once you remove yourself from the branch and get up to a larger branch and maybe corporate, they're knowing a little bit more. And
yeah.
But you're right, Bob.
Yeah, and I'm trying to, and let me say this to myself as well, since I can see myself on the screen. All right, be patient. I'm talking to me as well. All right? That Todd, like Todd said, that they did it. They set aside $350 billion. Looks like they're going to be through that probably by the end of this week. All right. and you're saying, where's mine? And I'm saying, where's mine as well, right? And so to that end, we're going to say, all right, that's it. They're trying to authorize another $250 billion. They do have it. It seems like everybody's on board with that portion. It's just whether or not we're going to tack more on top of that, right? And so I think once they get that hashed out, that eventually we'll get it. It just may not happen as quickly. Obviously, the fact that I don't have it yet, it means it hasn't happened as quickly as I would have liked.
Right.
But have some patience, but be persistent in your patience, right? Have your stuff, go ahead and get your Schedule C put together so you now know what they're going to be looking for.
Yeah, that's
so,
helpful.
so that you can say, all right, that's okay, good. Now you're accepting my application. Here's what you want. Here it is. Let's go.
Yeah.
Right? Cool.
Great,
Irma, let's
thank
go
you.
back. Let's go to Irma real quick.
Keep
Oh,
in
Todd,
mind,
do you have something you want to add?
I was just going to say, yeah, I mean, I agree with you, Bob. Just keep in mind, they're also getting paid for these loans too. So, I mean, quite frankly, you know, we're all deadline driven, especially us here in accounting as well. We understand what it's like to be pushed up against the wall with a client that needs something now to close on a property or do something. So these are bankers, these are professionals, so hold them accountable as well. That's all. So.
Very cool. Awesome. Great. I'll go to Irma and then Beverly. I did see Beverly's getting all fancy on us and doing the electronic raise hand. Good job. I saw that. So if you guys want to raise your hand, I guess there's a way you can electronically do that.
Funny.
So go ahead and do that. So Irma, we'll go to you and then we'll go to Bev. And if anybody else wants to raise their hand, I'm sure there'll be a little queue going on. So go ahead, Irma.
Okay, I have a quick question. I know, Todd, you mentioned something about it earlier. In reference to salary, I was really a 1099 and I just formed a LLC. So I'm trying to decide what type of salary should I pretty much pay myself. And just while I'm getting myself aligned with making a budget and for marketing, so forth and so on. So I am considering looking into this PPL as well, because I cannot, of course, and of course I have a son that's also on immunosuppressant, so I have to really be careful about what comes in, you know, in our house at this moment. So what would be a reasonable, is it like 30% of what you make? What would be a reasonable number you would say for the salary to pay yourself?
Well, it depends on what you estimate your income to be. And let me offer you this, okay? I'll give you a free call with me to just go over that with you as it pertains to your individual income. Because I don't think you want to, you know, talk about your individual income over the call. You know what I mean? So that way I can really cater it to you personally.
Yeah, because what he's saying, there's no one size fits all kind of answer to that. You know, and even a percentage isn't even an answer. I think everybody's situation differs. So it's great. And his answer might be a little different right now. Say, well, since you're going to qualify for the PPP, take a huge salary. so that way you can.
Well,
but it has to be proven in the past anyway. I know.
Irma, let me clarify something for you real quick. Is that for the PPP, it's based upon 2019 what you did. Right. Okay. Right. So if you were a sole proprietor receiving a 1099 in 19, which it sounds like you were, they're going to take that Schedule C from your 2019 return and do a 12-month average times 2.5 to tell you how much you're going to get from that. Okay. What it sounds like at this point, whatever you did after that doesn't matter as far as the PPP, because if they're basing it on this, there's no requirement for you to do anything to keep that money. It's already implied that you are from what I just read, unless they change that in an hour, but which they've been doing all along. But so now moving forward to your LLC, if we tax as an S corporation, you know, if you're making, you know, you want to take something that's reasonable in salary. Some accountants just say do half distribution, half payroll. I don't subscribe to that. To me, that's just oversimplification for telling your client to go away. I would rather have a call and go through a very thorough diagnostic of what you should do so that way you're maximizing your tax savings and not getting in trouble with the IRS. And there's no fee or obligation for it. Just you know, just reach out to my firm and just get an initial consultation with me
I can do
this
that.
week or next week, and I'll set you straight. You'll know exactly what to do.
Okay.
Perfect. Great answer. All right, Bev.
I think I've been on too many Zoom calls because I know how to raise my hand electronically.
That's good. And by the way, Rebecca, I see you got your hand raised, so you'll be next.
First, I want to say just a little plug for Todd. Todd's Unbehagen Advisors has been doing my my accounting and my taxes.
Yeah, me too.
many years, and they do an awesome job, and I couldn't be happier. And Todd, thank you for taking the time today to help us with this. Really appreciate it. If you're thinking about changing accountants, I highly recommend them. Another little plug, I bank with Regions Bank, which is kind of a regional bank, and I was able to apply like the second day, April 4th, I believe, and I got confirmation today that the SBA is reviewing my application, so that's great news. I am incorporated, and my question is I've been seeing some guidance from you on how we should create a separate account for those funds, et cetera, et cetera. I don't really understand that whole thing, like, especially if I'm only getting my salary. If I'm paying my salary out of my business account, that's documented. The money goes into that business account. It goes out of that business account. Is there a special reason why I should have a separate account? I guess that's.
Yeah. So Bob, if you could scroll, I think up a little bit. I have some bullets here in the newsletter about that. I added something.
Working on, hang on. There we go.
All right. Up a little, maybe. Down a little bit, I'm sorry.
Okay.
Under that. And I'll, after I answer Beverly. Okay, yeah, this last bullet down there. All right, so
okay, there you go.
Stop right there. Yeah. So what Beverly's talking about is that. So I'm recommending that when you receive your PPP funds in your business bank account, that you immediately open an additional new business bank account and transfer those funds into it. In that new PPP bank account, I mean, that's what I just called it. You will pay only your payroll, rent, mortgage, interest, and utilities out of these expenses only, because that's all the PPP is supposed to be used for. This way, after June 30th, which is the 8-week period that you have to take payroll, the forgiveness of loan period, the funds can be easily identified as to their proper use for loan forgiveness. Beverly, this is just kind of like adding a layer of protection, so the SBA and the Treasury can't come back. So back up a step. This is mostly advice for U.S. corporations that are PAs or PLLCs out there, and that have a separate business bank account, and have other expenses you pay out of that other than payroll. And it's definitely for bigger companies that might have 4 or 5 employees. It's even more important. The smaller loans, I don't think it's as material, but it's still prudent advice. If you have a larger, PPP loan and multiple employees, then I say definitely do this. The reason I'm telling you to do this is because when you get that money in from the PPP, you want to put it in a separate account and then just pay your payroll and the things that the PPP are supposed to be used for, which would be rent and utilities, basically. That way, when they come back later, because if you remember, for them to forgive the loan on the PPP, you have to have paid at least 75% of that loan towards payroll, okay? So this gives them, I know it's like easy math, Beverly, where we could just say, yeah, here's the amount, and here's my payroll, but sometimes it's just cleaner because you want to stay away from the word fraud anywhere you can with this, okay? And what I've said is that this just shows that cleanly you use that account for nothing but payroll, rent, and utilities, and it's evident that almost all those funds, if not all those funds, have been used up in that 8-week period, so that way they could show forgiveness of the loan. That way it's just a clear audit trail, just a separate account, keeping things separate. It's not mandatory, it's just prudent advice. You also want to be careful too. One little thing that I haven't put in any newsletters that I've been telling clients as they're calling in that are S corporations is once this money comes in, you don't want to take a huge shareholder distribution out, okay? Because then it looks like you're just using the money personally. And so wait until June 30th, take your distributions out as you normally have throughout last year if you're going to do that. Plus you're going to continue to take your payroll as you have. So that way there's forgiveness of the loan if you're an S corporation officer. But the shareholder distributions, don't take big amounts out until that June 30th requirement's up, because that looks fishy, if you know what I mean. So just
fishy with an F, not with a PH.
The P, yeah, with a
yeah.
Jim doesn't get confused. A couple more questions about that. Like you do my payroll taxes.
Yeah.
So if I create a separate account, my payroll taxes are part of my payroll. So
Right.
then I have to have you guys take it out of that other account.
Right.
My 401k has to come out of the other
Right.
account, all of that stuff.
Right.
So would I just call the office and say, hey, from now on, take my payroll taxes out of this account instead, or?
Through June 30th, then we have to log into the IRS and make those changes. Yeah. And then with the 401k contribution to JW Cole over there, we're gonna have to advise Alan to redirect those funds. Yeah.
Okay, thank you.
But
Good answer. And by the way, guys, let's just reiterate. I want to make sure you guys understand that this PPP, once we start receiving these funds, which I fully believe we will, right, David? We're thinking positively, David Bates.
Yes.
Yeah. Okay. There you go. We're going to receive these funds. When we do, remember, it's not an automatic forgiveness, right? There's going to be some type of level of proof. Now, sounds like the independent contractors might have even less burden of proof. They can just say, hey, my proof was in my, line 31, and there you go. But there's going to be something that you're going to have to file after the fact, one way or another, to show yes, or at least applying for the forgiveness as well, right? Because the loan's not automatically forgiven. I don't want you to think once you get it, you're done. And then I don't want you getting a letter from the IRS, 18 months from now saying, oh, by the way, right, you never filed for your forgiveness portion of this. And so now, we're asking for repayment of it because we don't have evidence that you did. So just Todd's giving really good advice, and that's not a bad idea to have a separate account, and so you can. It just really keeps it nice and clean.
Yeah, and it's not, you don't have to, but I'm encouraging it for the larger employers for sure. Smaller employers, like you said, Beverly, it's pretty easy to tell, hey, this is what I had. There's not many more expenses other than that, really. I'm okay with that for most of you on the call, but just if it doesn't take a whole lot, might as well, but just at least it's something to consider.
Perfect. All right, let's go to Rebecca, and then Mary, I see your hand raised as well. So we'll go to you after Rebecca. Go ahead, Rebecca.
Okay, hi. One of my questions was just asked by Beverly, so so that answered that one. And then the other one was just kind of a follow-up to, so I applied for the EIDL grants. It sounds like with the new information, we'll get 1K per employee. So I'm guessing I'm my one employee, so I'll get 1K. That's correct?
That's kind of what it's looking like now. I mean, I've talked to accountants throughout North America the past couple nights, and that's kind of what they're seeing. There's some language I won't mention on this call that's been said by a few accountants about not knowing what's going on with that specifically, and I let them know that maybe the Tiger King knows what's going on, but that's about the only person. But yeah, that's the theory there.
Okay, and so so with my application for the EIDL grant, it sounds like it automatically is also used as an application for the loan, the EIDL loan. Yeah.
So yeah, the thought is with the IDL, the initial grant money, once the loan is approved or denied, comes in, and now they're basing it. If you go, Bob, if you can scroll down to the EIDL section, I added an update on this there as well, because this stuff's just coming out now too. Yeah, right there. And I know probably whoever's been filing for the EIDLs probably received this yesterday from the SBA, but it basically says that they're, limited funds. They're finding that they're doing the $1,000 per employee. Used to be back when they said, oh, it's just going to be $10,000 that we'll give you. But now they're adding more verbiage to it. So it's going to be $1,000 per employee. I guess if you're one employee, that's $1,000. And then that money, if you go down, Bob, maybe it talks a little bit about how they work together. Yeah, perfect segue. So how do they work together? So yeah, you should apply for both if you can, but you cannot use funds from both loans for the same purposes. So the PPP is used for payroll. As long as you don't use the EIDL for payroll costs, like let's say you use it for marketing, budget for real estate or something else, you're good. Then the loan forgiveness eligibility is not effective for the PPP. If the EIDL is used for payroll costs, your PPP will have to be used to refinance the EIDL. What they are saying though, just to kind of, that's not clear in here, is that grant money that's coming out from the EIDL, that is basically should go against the forgiveness and turn into a loan. How they how they figure that out later, I don't think they're fully clear on. So what does that mean? They could come out and say, okay, that $1,000 you get now, you have to pay back with the PPP as a 2-year 1% loan. So what? You give them $1,000, or you just hold the money, because you don't have to pay it for 6 months back as a loan. You get a 6-month deferment. So they'll have more clarity on that $1,000 and how that's going to work. But for now, we're just saying apply for both. We'll figure it out as it comes out, and it's going to be your money. It's just whether or not if it's fully forgiven, you are able to keep it or not. And what this is saying is that as long as you don't say, hey, I used that $1,000 on payroll, that grant money from the EIDL, I used it on marketing, then there's a high probability that you're able to keep it and it won't roll into a loan. That's what the verbiage is saying right now.
Okay. Okay, great. Thank you.
Subject to change in an hour, though, right? Rebecca?
Yeah, right. Check back.
But
Always check Todd's latest updates on his coronavirus update.
Right.
All right, perfect. All right, let's go to Mary Diaz, and then Barbara Ann. I see you physically have your hand raised. I'll go to Mary, then I'll come back to you, Barbara. Go ahead, Mary.
Hi, I have a question. You probably answered my question, but you were talking about corporations. I have an LLC, and I get a monthly salary. So that's the PPP. That would apply to the. I mean, this I can.
That's the amount you can divide with that. You annualize it, right? Whatever that was for last year, that annual salary, whatever you took monthly times 12, then redivide it by 12 and multiply that times 2.5.
Okay, so if you take that and then it's I mean, if you divide it by 12, it's already the same amount that you started with.
Well, yeah, that's what I'm saying. So you could, if you know your monthly amount and it was consistent, or if you look at your 2019 tax return, let's say you took 3,000 one month, 5,000, and but you add them all up and it adds up to $25,000 or $24,000. You divide that by 12, and that's $2,000 is your multiple that you multiplied times 2.5 to get the amount of your loan.
If you have the same amount, it's just times 2.5. That's it.
Correct.
And the question that Todd, thank you. You've been great. Okay.
Yes.
You talked about rent, utilities, and payroll. So you can deduct your rent, meaning but if I work out of my house, is that the mortgage payment? No.
No. It would be if you had a traditional rent.
Gotcha. Okay.
Yeah, I would stay away from that. There's been some slushy guidance on that. For the sake of this, I would just say it needs to be your payroll. Yeah, if you were a business that had a rental place, that's why for sole proprietors they got rid of the whole rent thing, because they knew they'd be messing around with home office, and they're just like, I don't want. So no, I would just say for you, it is it's going to be the payroll, and your home office and stuff could be will be separate. The payroll costs calculation too, back to what a couple of you said, and Beverly, you mentioned with the 401k, that includes the employer's contribution to a 401k. So the cool thing is that if you are S corp, which is part of the consulting, obviously Beverly picks up what I'm throwing down. If you have enough income, it might make sense to set up a solo 401k as well, because you can defer up to 25% of that W-2 payroll as a solo 401k, a one owner 401k, and that's your employer match. So like if you paid yourself $40,000 in salary, that's $10,000 you could put away to your solo 401k a year, plus internally another up to $19,000 or $19,500 a year. So that's $29,000 you could pre-tax be putting towards a solo 401k in this example. And if you're over 50, it's even more money. So and those clients that are doing that through their PAs and PLCs, they're able to actually add that, in my example, $10,000 employer match to their $40,000 for the PPP calculation.
Okay. I have one question because I have to leave. I have to go to another webinar.
Yeah.
Are you going to talk about, Bob, about the form that you
send? Oh, probably not on this one. Did you watch the video yet?
Yes, I did, and I printed the form already.
Okay, perfect. That video is pretty much is my knowledge on that. Jim doesn't know this yet. Hey, Jim. But we'll be sending out a quick email with that. Either if we're going to send out a link to the video that I recorded or not, we'll figure that out. Go ahead.
I don't want to take your time, but I had a quick question.
Sure.
If the seller if somebody doesn't want to sign it,
Yep.
do you acknowledge that on the form and that's it?
Yeah, what we would
Covered?
do, I mean, and if it's your client, we would encourage them to do so. If it's a seller that has refused to sign it and you're wanting to show that property, right? And we're telling you should get this from the listing agent,
Right.
and they say, well, our seller has refused to sign it. Our thing would be, we're going to have our seller, or I'm sorry, our buyer, they're a potential buyer because they're just going to want to go look at a property, right? We want them to sign it, acknowledging that we advise the seller to complete this, and kind of like almost like a seller's disclosure when they don't fill it out, right? We say
Gotcha.
seller refused to complete.
Gotcha.
And then at the end of the day, if our client refuses to fill it out, just
Right.
have evidence that, or to sign it, just have evidence that you put it in front of them. I'm not going to stop you from showing the property, but I'm going to say, hey, look, you're doing this, and I'm going to save this email that I sent this to you. You've obviously read it, but you've chosen not to sign it. So that can help us later on.
The form is a little threatening, sort of.
It is. It's a little scary, and it's
right. And some
designed
people
to do so, but it also, they're trying to make sure people aren't going to trust me. Morgan & Morgan's already firing up the printer right now to say, oh, you caught COVID because Mary Diaz made you go look at a home.
Right. That's what I'm thinking, because it's going to happen.
Right. Exactly. And so we're just they're trying to circumvent that if we can.
Okay.
So
thank you, guys. I gotta go. Thank you.
See you, Mary. No problem.
Bye.
Barbara Ann, go ahead.
Yes. My question is, and I got to quit because I've got a 2 o'clock coming up.
You guys are busier than I got to see. I use one. I don't know. They have all sorts of terms up here in Tennessee. Busier than a fox in a hen house with a.
I know.
With a one-legged.
My gosh! But the question is that is it possible that this could turn around and it's forgiveness, but then be charged income for it?
No.
No.
I've been working around the IRS for 20 years. They're not going to stick it to you on this one.
Yeah.
Okay.
Yeah. They're pretty clear, right?
Do it other ways, but not now. No, when everybody wants to get reelected, it's not gonna. They're not gonna do that this go around.
Okay. That was my thought. It sounds good, but what's the back end going to cost us, even though it's left?
Right. Exactly.
No, this money goes into the economy, but guess what? We're going to be paying taxes for this the rest of our lives. So you better take full benefit of whatever you can in this case, because our rates are going up. Somebody's going to pay for it, just not right away.
Yeah.
That's absolutely.
No free money, really, at the end of the day. Renee, I saw you waving. Do you have something?
I do, in fact, and just like the White House briefings, I have 2 questions. The first question, Todd, who's going to make the interpretation on that other 25%?
Oh, okay. So again, there's not firm guidance out, but if everything, it's probably going to be the SBA's guidance to the Treasury. And it's the Treasury. Ultimately, it's the Treasury because, the Treasury works with the SBA on this. So my answer would be both of them. Everything's right now kind of on your honor. So, are they just going to say at the end, you have an attestation notice that says that I attest to the fact that I used it for that? Kind of like with the loans. The bankers aren't doing a whole lot of oversight here, quite frankly. They're supposed to do some minimal, but they're allowing most of these applicants to use their own calculations on the PPP. That will be interesting. That's a really good question. We don't have the exact answer, but I'm assuming by June 30th, that'll give them some more time to tighten things up a little bit. And I'm sure there's going to be a task force on fraud and looking into, just like there's Medicaid fraud and those sort of things. There's going to be probably people looking in just to keep people, honorable. But at the same time, I think most of this is just to get money in people's hands as quick as possible. If they started having a whole lot of regulation on things, it would almost defeat the purpose a little bit of getting money into the economy. Granted, you don't want to get it into crooks' hands, but at the same time, is that going to happen? Yeah, I'm sure it does, even with the best intentions. But I don't know exactly how they're going to come up with that. I just say be ready to calculate it, be ready to prove it. That's all.
Okay. And your follow-up question?
Yeah, and so and be ready to potentially pay that additional 25% if they don't like the fact that you used it for marketing, or subjectively you shouldn't have used that for marketing. You should have, you know, who's deciding whether what was
there'll probably be a questionnaire about what your payroll is afterwards, and it'll, you know, as long as over 75% of those funds were used on that payroll cost calculation, including your payroll costs going into the loan, which includes obviously your employer retirement matches, et cetera, then you're going to be able to forgive the full loan. What we think and what the guidance has said at this point is that if, let's say, you only use half the money for payroll and half the money for the PPP money for anything else other than rent and utilities, which doesn't matter to most realtors, then they're going to prorate that half towards the 2-year loan at 1%. And so if you got $50,000, 25,000 will turn into a loan payable in 2 years, or 1%. That's how we think it's going to go down.
Okay, excellent. And then the other question that I have is, how long does it take your organization to set up a new client whose QuickBooks disintegrated?
I mean, I can have you on a call within a few days, if that's what you mean. I mean, our whole staff is working. I mean, it's April 15th, but it's not. It's like tax season until July right now. So, I mean, thank God nobody's got this virus right now. So, I mean, we're going full out. So, just get on my calendar and we can have an initial consultation, and I'll point you in the right direction.
Thank you.
Awesome. Good deal. Anna, go ahead.
Okay, it's pretty clear for me for the individual agent with Schedule C, you are looking for line 31. Now, for Corporation S, I would like you to repeat the forms you need to apply. Then
Sure.
That would be great. And I have another second question to follow up.
Okay, so the forms, each bank is asking for a little bit different forms. Like Bank of America, like Chase Bank's only asking for your W-3. That's it. Bank of America is asking for a 940. That's it. Some banks are also, so they're payroll forms, right? So they're the payroll forms you had for 2019 that go to the federal government, and sometimes the state government. So those would be your quarterly 941 forms, 941. Those would be your year-end 940 form, your federal unemployment. Those could be your RT6 forms. That would be your quarterly state unemployment for Florida forms. And then your W-3 and W-2 at the end of the year. That would be what's reported as an employee and then goes to the Social Security. So those are your main group of payroll forms that the banks are asking for. They're not asking for financial statements and other things typically, unless they're, you know, I don't know, some banks are, I shouldn't say all, but really the only requirement they're doing the calculation on is your last year's payroll. So as long as they have, you know, backup for that as to what you're asking for in the loan, and they can tie those two numbers together. And then sometimes if they have a worksheet, like Bank of America, for example, has a worksheet where they have a template where you put your 940 amount in there for payroll for the year, you add the couple things they want in the payroll costs, and you take away a couple things, and then voila, there's your number, and it's pretty straightforward. So it's made to be simple.
Okay, great.
And you know what, Anna, let me answer real quick too, just so to bring it home for most of you guys who are single employee S corps, right? Your W-3 and your W-2 are the same, right? Because you were the only employee. A W-3 is a compilation of all your W-2s, and since you only had one W-2, that your W-3 looks, now they may ask for your W-3, so you should have filed it, right? Or your whoever handles your payroll, but that should do it. But if you've been doing this through a payroll service like Todd offers, then you should have all those documents, or if you don't, you request them from the person that was doing it for you.
And the second one, the minimum is 75 for payroll cost. Can you apply for just and used everything for payroll, like 100%?
Oh yeah, it's got to be. You got to spend at least 75% of the PPP money on payroll. So if you spend more than that, you're good to go. Yeah, you want to spend all of it if you can. Yeah.
Okay, thank you.
Good deal. Let's see. I got Tim and Rana Wall have raised their hand electronically. Hey guys.
How do you do it electronically, Bob?
They're probably down there and let's see.
I cannot see it.
Anybody how do you raise your hand? Those of you who raised your hand. Tim and Rana, when you come on, tell us how you raised your hand.
Under participants.
Tim and Rana, are you there?
Click on the participants on the bottom, and then you'll see the list of people. And there's a little option to raise your hand.
Oh, I see it.
There it is.
Look at that. We learn all sorts of things. What a W3 is and how to raise our hand in Zoom. We are full service around here. Todd, are you good? I know we're past your time. Do you have a couple minutes still?
Yeah, I can keep going a little bit. No problem.
All right. Let us know when you need. Tim and Ron, are you there yet? We don't see you or hear you other than your raised hand. So we'll come back to you in a second. Rebecca, do you got a new raised hand question?
Yeah. My husband was actually here listening, and he had a good question. So for using the money as payroll, can I give myself a raise? Is that something that we can do so I can use more of that money at this time? Because if we need to access it, I just don't want to have to, turn it into a loan or wait until June to really be able to touch it. So can I give myself a raise?
Yeah, right now there's no specific guidance on not being able to do that. But yeah, and I'm assuming the raise wouldn't have to be so astronomical that, it's just enough to get you safer into the forgiveness zone, so to speak, of that, right? I mean, you're not talking about, there would be no reason to give yourself a giant raise above what you, just to pay more Social Security Medicare tax in, I wouldn't think.
Right. Yeah, just a little increase.
Yeah, you're fine.
I'll talk to you guys more about that on the side then, but it sounds like that.
No, you're good. Yeah, no, you're good. So yeah, if you give yourself a pay increase, you're okay there.
Okay. Do I need your guys' permission before I do that, or when I just give you my list, I say this is my income?
Yeah. You know how we calculate your standard payroll and stuff for the year? We can, you can just bump that up, the gross amount, and then just add a little withholding, or you can email me your spreadsheet and I can look at it for you, however you want. But you don't have to, you just need to let Mary know and in the accounting department that that's what you're doing for the next couple months. If you're going to calculate it yourself in the monthly accounting packets you send to us. So no big deal. Yeah.
Okay, perfect.
You would have to pay more payroll taxes, more Social Security, Medicare, and payroll tax, right?
Yes, that's why I said you won't want to do that the whole year, but maybe just exactly, Beverly, to qualify though, just to be a little safer on the requirement for it to become a forgivable loan. If you think you need to do that, then go ahead and do that through June 30th. Then after that, we can reevaluate once that PPP analysis of forgiveness of loan period is over.
Okay, perfect. Yeah. Thank you.
Yeah, you got it. Good to hear you.
You too.
All right, Tim and Rana, you back yet? You're not muted. I know that. We could hear you kind of rumbling around. So, all right, if you got something, you can reach out to Todd directly. I think if you have it, or get on his book if you have something, or if you want to reach out to the group. So let us know. Anybody else have anything? I know Todd stuck around already 11 minutes longer, so we certainly want to be cognizant and aware of his time. Anybody have anything we want to do? Nothing off the top?
Yeah.
Perfect. Let's give Todd a virtual hand clap for coming on board. I appreciate it, Todd.
Thank you, Todd. Appreciate the information.
Yes,
thanks, everybody. No, it's my pleasure, and thanks for all of you that are clients for being a client. So anything you need, just reach out to me, okay? Glad I could help.
Thanks.
All right. Thanks, Bob.
Everybody. God bless you guys.
All right. See you guys. Everybody stay safe. All right. If you need us, let us know. Reach out.
Talk soon.
All right. See you guys.
Bye.
Bye.